AI bubble or reality? Why the Nasdaq is terrified of Feb 25th, the most important day of 2026. This is it. This Wednesday, February 25th, the entire financial world stops. Nvidia is reporting its Q4 2026 earnings, and it's not just another quarterly update. It is a $4 trillion moment of truth. After a brutal February where the Nasdaq has been gasping for air and software stocks have been vibe-coded into oblivion, investors are asking one question: is the AI trade finally over? Last week we saw a violent rotation. Money fled software, wealth management, and professional services because people are suddenly terrified that AI isn't just a tool anymore, it's a replacement. But while the scare trade is crushing the service sector, Nvidia's Blackwell chips are reportedly off the charts. Today, we're doing a deep dive into the hype versus reality. We'll look at why infrastructure plays like CoreWeave and Nebius are seeing massive volatility, why Salesforce and Home Depot are the secret canaries in the coal mine this week, and exactly what Jensen Huang needs to say to keep this bull market alive. Section 1. The scare trade and the software bloodbath. Let's talk about the elephant in the room. Why is the Nasdaq struggling if AI is supposedly thriving? Since late January, we've seen the rise of what analysts are calling the AI scare trade. It started with software. Investors realized that if an AI agent can write code, manage a database, or handle accounting for pennies on the dollar, the old seat-based subscription model for software is dead. Look at Sage or RELX. They've been hammered because of agentic AI breakthroughs like Anthropic's Claude Code and Altruist's Hazel. When people can build their own apps by just vibing with an AI, why do they need a $50 month SaaS subscription? The reality check. The market is currently punishing anyone who looks like an information broker. If your job is just moving data from point A to point B, the market thinks you're obsolete. This is why Nvidia is the only safe haven. Because no matter who wins the software war, they all need Nvidia's silicon to fight it. Section 2. Nvidia. Q4. Estimates. Can they beat 65 billion? Now, let's get into the numbers for Wednesday. Wall Street is looking for $65 billion in revenue. That's a 68% jump year over year. But here's the kicker. The whisper number is even higher. Some analysts think that with the Blackwell GB300 ramp in full swing, Nvidia could guide towards $75 billion for Q1. 3 things to watch. 1. Blackwell yields. We know demand is off the charts, but can they ship? Updates on their partnership with TSMC and production yields are critical. 2. China sales. For the last year, China revenue has been essentially zero due to export bans. If Jensen announces a sanction-compliant chip that's getting traction, that is pure, unmodeled upside. 3. The Rubin roadmap. We're already looking toward the Rubin R100 architecture for late 2026. If customers start delaying Blackwell orders to wait for Rubin, we could see a pre-announcement lull. Jensen needs to convince the world they need Blackwell now. Section 3. Infrastructure volatility. CoreWeave and Nebius. If you want to see where the hype meets the hard assets, look at the specialized AI cloud providers. CoreWeave, CRWV, and Nebius, NBIS, have been the darlings of 2026, up double digits early in the year. But look at the last 48 hours. They are swinging 8–10% a day. Why? Because these companies are the ones actually buying the chips. CoreWeave has a $55 billion revenue backlog. Think about that. But they are also burning billions in cash to build data centers. The bubble argument. Critics say we are overbuilding. If the software companies, Section 1, are failing, who is going to pay CoreWeave to use those chips? The reality argument. Meta just signed a $14.2 billion pact with CoreWeave. Microsoft signed a $19 billion deal with Nebius. The big tech players aren't slowing down. They are outsourcing their infrastructure because they can't build fast enough. Section 4. The side characters. Salesforce, CRM, and Home Depot, HD. Don't sleep on the other earnings this week. Home Depot, Feb 24. This is your barometer for the US consumer and the housing market. If HD misses, it suggests that despite the AI hype, the real economy is hurting from 3% inflation and high rates. Salesforce, Feb 25, reporting the same day as Nvidia. This is the ultimate test for AI software. Mark Benioff has been pivoting Salesforce to Agentforce. If they can't show that AI is driving new revenue, the software sell-off will get much worse. Conclusion: the game plan. So, what is the play? If Nvidia beats and raises, it validates the infrastructure trade. It says, the hardware build-out is just beginning. If Nvidia beats but the stock drops, like we saw in late 2025, it means the hype has officially outpaced the math. My take: watch the 75% gross margin line. If Nvidia can keep margins that high while ramping Blackwell, they are still the undisputed kings. Next step. I've analyzed the technical levels for Nvidia, specifically that $170 support level. If we break that, we could see a slide to $150. Would you like me to do a deep dive on the technical charts for the Mag 7 to see where the floor is? Leave a comment below, bubble or breakthrough. And don't forget to hit subscribe for the live earnings reaction this Wednesday. Stay awake, stay aware. This is Felix. See you next.